Hey guys, Brian Stevens here with the National Real Estate Post. We have our favorite non-QM CEO, Chris Martin with Oaktree. How you doing today, my friend?
Good, man. How about yourself?
I'm doing great. Hey, listen, there's a couple of things. The first one is, and I want to get to, is how can Oaktree help loan officers and realtors today? And you guys have a great plan of attack, and I want to get to that in a second. But I have a couple of questions for you first. The first one is we're seeing attrition in the market right now, yet there seems to be an uptick in non-QM. What's the reason for that?
I think there's an uptick across the board, but non-QM rates for a couple of different reasons have gone down. The bond market, the securitization market, the spreads have narrowed. They were 210 to 230 basis points for AAA bonds last year. They're now down to 140, 160 in some cases, just depending upon who's securitizing the loan. Well, that might seem high from years past, but that's really low for where they've been. So that certainly has helped out a lot. That's caused the insurance companies that have been active in the market to respond and lower their rates because they still want product, they still need deals, they've got mandates. So that's going to be the biggest reason. Obviously, new money, new year, new money. People have brought cash to the table. They see the rate improvement. I think that most people feel like the Fed might lower rates maybe toward the end of the year, but with all the positive economic news, I think that the consensus is that rates are going to be remaining fairly stable. So that means that investors are okay with buying loans and they're going to hold on to them and they're going to pay for the duration that they expect them to pay. And there's not going to be this significant rally and then run off of their portfolio. So they're willing to go out there and spend a little bit more money and buy loans. So that savings, when we get better pricing from our investors, we obviously make sure that our clients are getting the best pricing possible. And we're actively out there making it happen.
Okay, so that's a great point for loan officers and realtors right now, is pricing has gotten better in the non-QM market. And as I know, Oaktree has always been very aggressive trying to bring the best rates to loan officers and real estate agents so you can bring those to your clients. Make sure you talk with these guys before you place your non-QM loans. The flip side of that coin is that we've also seen that delinquencies are up in the non-QM market. What's the reason for that? And real quickly, what is Oaktree's strategy and how is that an advantage for realtors and lenders looking to place their deals?
So delinquencies, I think, are up across the board. Look, I mean, today's unemployment report, the continued unemployment claims report has been higher than what was expected this week. Obviously, last week it was lower, so we'll see what happens next week. But people are losing their jobs. When people lose their jobs, they don't have income to make their payments. The higher interest rate environment that we've been in has obviously caused people to think they could afford a house, and maybe they really just can't. Maybe their payments were higher than what they thought they could afford. People go through their reserves quite quickly. We just came off a period of free money and free COVID forbearances. Non-QM lenders aren't Fannie Mae lenders. We don't have to follow the same rules as a Fannie Mae or an FHA servicer as far as giving mandatory moratoriums on foreclosures and things like that. It's private money. What we do is at Oaktree is we make sure that our borrowers are making their payments on time. A lot of times when you get a new loan, we've all been through the process. You get the loan that's sold to one person, and then the servicing transfer game begins, and then it goes to 2 or 3 other people. We can't control that. It's just how the business works. But what we've set up is a process where Oaktree manages the ACH payments for the borrowers. We make
And that ACH, just real quickly, that's where it comes.
it's drafted right from their bank account, no charge to
Okay.
the client. We manage that process, and then we make sure that the borrower's payment goes to exactly where it needs to go, so they don't have to worry about, oh, where do I make my next payment? And once that kind of shuffling game is over, or at least we feel like it's over, we stop that process. We set their ACH up with their new final long-term servicer, and then the borrower's got nothing to worry about going forward. Just make sure their paycheck gets deposited to their bank account. And then if there is some problem for delinquency, we're able to intervene and find out on day 2, not on day 15 or day 20. Once we get a letter from a notice from a servicer, hey, this borrower hasn't made their payment yet. We got 5 days to get a hold of the borrower to find out what happened.
We're able to get involved in that process much sooner and really help to see what we can do to correct the problem before there is a problem.
And does that allow you to be more aggressive with your underwriting?
Oh, absolutely.
Okay.
Because listen, there's 2 things with regards to mortgages, right? You've got origination and then you've got collections.
Right.
And obviously the origination is great. That's where the money is for the LOs and the brokers and everyone else. But the collections is where the long term, where the rubber meets the road. And if we're doing a good job making sure that loan gets established and on the right path right off the get go, we know that we can make better decisions in underwriting so that we can be more aggressive with our exceptions, because we know that we're going to make sure that that borrower's payments are made and they're started off on the right track.
Okay, and this is what I really want to, I've always just want to scream at the top of my lungs because I know you guys do such a great job of this. And loan officers and realtors, listen up here. This is absolutely huge because it's an opportunity that you're missing out on. And right now, we have to take advantage of every opportunity that we have. And I got to tell you, we have to take accountability for our own business. So that means getting out of our skin and doing things that are uncomfortable, which is actually trying to learn new products, maybe new technologies. And Oaktree has incredible product training for you, not just the products, but also sales. Can you talk about that a little bit, Chris?
We do webinars for 1 to 30 people all the time. We just recently did a branch training for a lender back east
that I think had 60 or 70 loan officers on it.
Just talking about non-QM products in general, how to sell them to clients, how to share the benefit to the borrower with you. Listen, our job and your job as a broker LO or as a loan officer is to make sure that your client's getting the best deal that they qualify for. And that doesn't mean that, hey, this Fannie Mae loan at 6.5% is the best deal they qualify for, because that might not be the right deal for that client for one reason. They're self-employed borrowers, they're 1099, they want to do a full asset depletion type of a loan. They're property investors, they want to invest in lots of different properties. All the property limit restrictions. Fannie Mae doesn't even want investment property loans right now. So they've priced, their LLPAs are atrocious. So many times you're going to see off of our rate sheet, you're going to see better pricing. And if you call your account executive, they may even have access to even better pricing than that going for your investment property loan. So, we want to help to put you guys in the driver's seat to get more access to more products, more programs. And then if we need to, make the exceptions that we need to make the deals work.
So you're telling me if somebody is watching this right now, a realtor or lender is watching this right now, either an office or an individual, they can call your office up and you will train them on products.
Yes.
You'll train them on sales right now. Any cost on that?
Right now.
Any obligation? Do they have to be signed up with Oaktree?
Nope. No, we'd love for them to get signed up, right? but
I mean, that's the idea.
Yeah,
it
that's
certainly
the idea.
is.
But you don't have to be signed up. Our account executives would be happy to train you, train your team, train your staff. If you're local or in a local area that one of our AEs are in, they'd be happy to go out and visit with you. Otherwise, modern technology, we use Teams a lot. You guys, Zoom, whatever you guys want, we can get online and take care of training. They got a presentation they can go through. They can walk you through the guidelines, how to price a loan, how to look at a loan. It's in many respects, it's easier to price out and figure out how to do a non-QM loan than even a conforming loan sometimes.
You ain't kidding on that.
LLPAs.
Listen, guys, take the initiative with your business. Things are slowing down. Like what we're going through right now is not changing anytime soon. When you work with non-QM and you become fluent in the language of non-QM, you get more arrows in your quiver, tools in the toolbox, knives in the kitchen, that type of thing. It's insane that you wouldn't take advantage of this. It's free. It's right in front of you. Oaktree is always aggressive with their pricing, with their underwriting. These guys are fantastic. Do yourself a favor. Be impulsive and do what you usually don't do. Get your phone, pick it up, call these guys, and talk with one of their account reps. By the way, I know them. They're all pretty cool over there too. Chris?
By the way,
Look, I mean, I know that you think of, I'm going to have to go sit in this training. And I think of like, oh man, I have to do product training. I'm going to be bored. I'm going to take a nap. My guys don't want to be boring. They want to help engage with you and find out what you're working on, what your business looks like, and how they can help you bring in more business. Because if they can show you value,
Yep.
just like you have to show your clients value. If they can show you value, they know that they're going to get more business from you. So they're not going to sit there and try and think of ways to give you the same mundane speech. Hey, I get all my business from a credit union. Well, okay, well then let's talk about how you can get more business from credit unions. Like, duh, they're not going to do that. They're going to say, hey, I'm getting business from here. I'm getting business from how can we expand that base? How can we find more clients that you might be able to qualify for? If you get all of your if you get all your business from the school district because you have a teacher's incentive program and that's your sole focus, they're not going to talk to you about how to get more business from teachers. They're going to talk about why don't we get more business from, do they have night jobs? Are they doing Uber? Are they doing Lyft? Because teachers don't make a lot of money sometimes. How can you qualify them with that income so they could buy more house? How can you find that next level referral? How can you qualify more of your realtors who all have investment properties? How can you make your real estate agents your clients? How can you help them build their investment portfolio? How can you do those things? And that's the type of stuff they're going to work on with you.
I didn't even think of that. That's actually real. I didn't even think of that. So when somebody's looking at like a teacher or a civil servant of some sort, and when you're looking at your conventional loans and you have your qualifying income, you can't use that second job income. So you're saying, hey, we're going after the same client sometimes,
Yep.
but we're looking at income that would otherwise be non-qualifiable. I never even thought of that.
And listen, teachers, they have a defined pension plan for the most part if they work for the state. And they, what's another way to build wealth in America? Investment properties, right? I mean, real estate. How can you help them capture some of that extra real estate so they can earn more passive income? You know, they don't work 3 months out of the year. You know, they want to travel, they want to have fun, or they want to be stuck at their house because they're only making, you know, they're $60,000-$70,000 a year. I mean, there's more things that you can do to show them opportunities, even if they're not doing those other second jobs, that these are options for them. These are opportunities that they may not otherwise have access to unless you tell them about them.
You just picked my next story for my next show. That's a brilliant point. I think that's wildly overlooked. And these are the type of things that people are going to learn when they go to your trainings.
Absolutely.
Hey, listen, the number's here, the email's here. Reach out to these guys today, okay? Do something you don't do. Take control of your business and do it today, because we've got the cold winter in front of us. Chris, thank you so much for your time, dude. This has been super helpful.
Thanks, Brian. Take care.